Hey, what's up, my friends? So, welcome back, but first, a quick announcement, right? On Friday, which is about 2 days ago, I just officially become a dad, right? My baby girl just got into this world, and hey, welcome to parenthood. And to keep up with time, I decided to get back my old Flintstone t shirt, right? Just to bring out my little childhood memories so I can, go back to her level and, start to play with her. But that's it, right? I should be a little bit more busy than usual, right? I need to, feed her, clean the poo-poo, make sure she's well. But that aside, right, nothing changes, right? The market goes on, trading goes on, and I'm still here to answer any questions that you may have. So back to the markets. In this week's market analysis, right, I'll be talking with you a few trades that I took, right, some losers along the way, and I'll share with you my thought process on how I actually handle them, right, in the days ahead. So we'll be mainly talking about the Aussie dollar, the euro pound, and gold. But first, right, let's have a look at some pictures, shall we? Okay, so this is my daughter, right? Her name is Jay, and yep, this is her, right? This is me. So in this picture, I think she's about a few hours old, right? She came out in the afternoon around 2 p.m. And this picture is taken, if I'm not wrong, about 7, 8 p.m. So she's about 6 hours into this world, and yep, this is how she looks like. And this is another picture of her, but in a different angle. And I would say, right, my wife is already starting to say that we look alike. Come on, man. I mean, she's only a few hours old. How do you even tell whether she looks like me? And when she's only a few hours old. But here's a reason for it. This and this. Do we look alike? Well, I have no idea. Yep. And this is finally, right, a picture of me and her together. And it's my first time holding a baby in my arms, right? Trust me, I've never held a baby in my arms. I'm so scared of, hurting it because it's so small and tiny. You know how small it is? It's basically about the length of my forearm. And she weighs about 2.6 kilos. And this is it, right? This is how small she is. And you know how afraid I actually am, while holding her. And that aside, right, a little trivia for you. Do you know that, when babies they are in the womb, right, they started off as small as a sesame seed. That small, right? You know how small a sesame seed? And 9 months later, boom, you get something like this, right? From a sesame seed that has basically this size to something like this in 9 months. This is amazing, right? I have no idea, how this could happen, but it's definitely the works of somebody up there, right? 9 months, right, from this to this, right? Amazing, right? So that's it, right? This is the little thing that happened to me over the last few days, right? She was out on a Friday, so yep, being a dad for the last 2 days. So that's it, right? Let's not get carried away. Let's go back to our weekly market analysis, right? I don't want to end up, this entire video talking about me and my daughter, right? So back to the markets, right? So that's it, right? If I sound little chirpy, little hyped up than usual, it's because I just become a dad, right? So spare me, give me some room to be a little bit more vocal today. So that's it, right? This is the weekly market analysis, the Aussie dollar, right? We talked about this last week, right? I mentioned that I'm actually bullish on it because why is that? Because over the last 1 year, price has never closed above the 50 period moving average. And finally, right, couple of weeks back, it finally closed above the 50 period moving average. You can see this bullish strong candle on top of it. And on top of it, right, on a daily time frame, you notice that it actually broke out of this key resistance area as well. This is the highs of 2015, if I'm not wrong, right? A yearly high. So it broke out of it as well. So I'm basically bullish on the Aussie dollar. So where I went long is that on the 1 hour time frame, right, I went down to a lower time frame and actually spotted a trading opportunity. On a 1 hour time frame, I noticed that the 20 period moving average, right? Sorry, the 20-50 period moving average is acting as dynamic support. So this is an area where, price has been respecting it a few times in the past. So it makes sense, to anticipate that it could respect it once more and, expect higher prices to come. So I got long in this 20-50 period moving average over here with a stop of 2 ATR. So I think it's just somewhat just below this low over here. So you can see price went in my favor, then it traded against me, almost stopping me out. Then it traded in my favor, retraces, tried to stage on a higher rally, but it couldn't, and finally closed below this swing low over here. So this was a sign for me to get out of my trade. So I exited at a trade, right, for a loss of about, I think it was 0.8R. This was a loss. And the next thing I know, price then, rallied back in my favor once again. So didn't really feel too good, right, to exit my trade only to see price move back in my favor. But hey, it happens. Alright, sometimes when you exit your trades, right, it hits your trailing stops or your stop loss, alright, and that is actually the low of the market, and after which you went back further in your direction. Trust me, right, no traders will feel good about it. But instead of, feeling sore about it, feeling angry about it, I would say the most logical thing to do is to ask yourself, is the trend still intact? Because if the trend is still intact, then the next question will be, where would I look to enter my trade once again, right? Clearly, you can see on the Aussie dollar, the trend is still intact. So ask yourself, right? I'm asking myself, where would I enter it once again? So needless to say, right, on the 1 hour time frame, well, it seems that the 50, tends to be breached by a little bit. So if you were to retrace back lower, I would say this area over here, right, if it does retrace back towards the 50 period moving average, the previous resistance turn support, this could be a potential area for me to get long once again. And if you look at the 4 hour time frame again, you notice that it tends to respect the 20 period moving average, 20 period moving average. So I won't be surprised if it comes back lower, retesting the 20 period moving average before it rally higher once again. So this is my plan on the Aussie dollar, alright? I basically got stopped out at the lows of it before price went back in my favor. But hey, right, this happens, right? I definitely can't predict where it will go eventually. All I can do is just manage my risk. If I get stopped out, so be it. Right, so this is my Aussie dollar experience and my take on it. So the next thing I want to share with you is the Euro Pound. Again, something very similar happened. So the Euro Pound, again, I was bullish on it, if you recall, right? Daily time frame, you see that, it's basically in an uptrend, right? How do you tell if it's in an uptrend, right? Higher lows, higher lows, higher lows. Respecting the 20 period moving average as well. This red line over here, the market is clearly respecting it. So I was bullish on the Aussie dollar and I found a trading opportunity on the 4 hour time frame. It looked at something like this at this point in time. Right, you see that this was the area of support that I was looking at. Price came into it, and I wasn't too confident in going long at this area of support just yet because I wanted some sort of a confirmation to tell me that price is actually holding up. So I see that it staged a rally and it tried to sell down lower, but it couldn't sell down with much strength because if you notice the price action, let's talk about the price action. If you look at the price action, this candle over here, this bullish candle over here is a very strong close higher. And the next 3 candles, 1, 2, and 3, couldn't really retrace the entire, the entire bullish bar. So it's telling you that, the selling pressure is getting weak. So when I saw this, right, I took it as a sign of strength. So I was looking to long this market. So I had a buy stop over this high, stop loss below this low. So in anticipation that this is actually somewhat of a false breakout, right? False breakout below this lows over here, taking out the stops below this low. So I went long over here with this buy stop order, stop loss below this low. So what happened next is basically, well, you see for yourself, right? It isn't an easy trade to hold. You can see that, it went in my favor, went against me, went in my favor, thought it finally is going to break out. Pam! A bearish pin bar against me. Then it traded lower. Finally, the ECB news came out, spiked me up for a loss, and then went back in my favor once again. So you can see, right? Same as the Aussie dollar. I got right on my direction, and I just got stopped out of the trade. And it's not because I put my stop loss poorly. It's just so happened that, sometimes the market tends to do unfavorable things to you like this. So again, this is part and parcel of trading. Okay? So yeah, you just accepted it and ask yourself, where are you looking to get on board the trade if you're proven wrong? And again, for the Euro Pound, I'm still looking at this level and I can see if there's any rejection before, I consider going back long in this area again, the Euro Pound. But from the looks of it, I see a head and shoulders pattern forming over here. This is the neckline, so I won't be surprised if this level actually gives way and it'll just break. So I'll keep a close eye on this market and see how it goes. So Euro Pound again, not too favorable for me. And let's talk about gold, alright? Gold again, I'm bullish on gold, right? If you've been following me over the last few weeks, I talk about gold. It broke out above this 50 period moving average. You connect down this downward trend line, you can see that it broke below it as well. So there is reason to be bullish on gold. On top of it, if you look at the daily time frame, it basically formed this what I call a pennant formation. And usually when you see something like this, there's a good chance for the move to continue higher. And let me share with you where I went long on gold. So on gold, on the forward time frame, I saw this, something that I really like, right? Because the 2050 period moving average is an area that is being respected by the market. So I basically got long on gold. Well, I got long on gold somewhere over here. I got stopped out, and to be honest, right, I missed the entries which were here, here, and here presented, right? I'm not sure why I missed it. Maybe I was too complacent, or maybe, I was at the hospital. I can't really recall the reason, but it's definitely my fault for, missing all these entries over here, here, and here. So with that said, right, I still, ask myself, is the trend still intact? Yes, it is, right? So I look for a potential setup to get on board the trade, right? So you come and think about this. Just because you miss this entry over here, right, does not mean that, you have to be in this trade. And a lot of traders, what they'll do is they force a trade, right? They want to be in a trade that they just missed, so they go long on a breakout over here of this high. Then price retrace against them, they lost money. So at this moment where they should be long, right, they cut their trades. So again, they don't feel good, right? Price retrace once more, test it, and they miss the move once again. So what they do? They go long and break out this high, then price come down and stop them once again. So you can see that if you are not following your trading plan, right? And if you miss trades, so be it, right? If you miss trades, so be it. Do not go out there and force trades. Do not chase the markets, because chances are, in the long run, it is not going to be a winning proposition, right? If you miss the trade, so be it, right? Ask yourself, why did you miss the trade? And chances are you only have yourself to blame. Or maybe, okay, maybe you have, you have work to do, you're working full-time, you can't face the market. So be it. If you miss the trade, there is always a trading opportunity somewhere in the future, right? Don't force yourself onto trades just because you missed them. So same for me, right? I missed the earlier trade entries, and where I got long was this candle over here, right? This pin bar, right? Took out this low, so I thought this was a good trade, right? A trade that fit my trading plan. Furthermore, it's in the 20-50 period moving average. So I went long. Next thing you know, I got stopped out as well when the candle spiked down lower, and then it rallied higher once again. So again, you can see that, my trades on the euro pound, the gold, and even the Aussie dollar, they were all similar trades, right? The direction were right, and I just got stopped out as it is, right? It's not because my stop loss placement is poor, but sometimes, you can put at, stop loss at really, really, places that you can't even think about the market will reach there, and it still reach there, and then it rally higher. So again, these are basically the cost of doing business, right? So these are trades that you have to live with, and believe that in the days ahead, right, these small losses that I've incurred will probably be easily, recovered by, just capturing a trend. And this is it, right? The key is to keep your losses small, right? And not go revenge trading, not go, taking ridiculous trade that is way out of your trading plan. Because like, as I mentioned, right, traders who miss these opportunities over here, chances are they will chase the market, they go long somewhere here, go long somewhere here, and these are all basically very poor locations to be trading from, right? Let price come to you, let it come to an area of value, and on this time frame goal, this area of value is this, 20-50 period moving average over here. So this week wasn't really I would say it's in terms of trading, right, the performance could be better because I missed these few trades over here, but in terms of P&L, it is something that is out of my control, because in the short run, my results are basically, random. I can't control it. So in recent, I would say last couple of months, you can see that, I was doing well with the Canadian and the oil. And in this week, right, 3 small losses that is, basically got stopped out, and watch price move back in my favor once again. So it happens, right? Trading is, there are ups and downs, right? Your trading curve is something like a your own P&L. It goes up, right? Then it hits a retracement, goes down. Then you catch a trend, it makes a new high, it goes up, retracement goes down, goes up, goes down. Sometimes you go into a very long consolidation, you have no idea when it will end, and the next thing you know, it breaks out higher once again. So this is trading, right? It is a emotional roller coaster, right? It goes up, goes down, and the only thing that keeps you going is, number one, you have to keep your risk tight, right? You see, right? If you are risking, right, say, 5%, 10% on each trade, right, these few losses that you incur has essentially wiped out a good chunk of your profits. And number two, right, have a plan, right? You need to have a trading plan, right? Because you don't want to, encounter scenarios which I shared with you earlier. You miss a few trades, then you go on chasing the markets, going long near the highs, right? Because without a plan, I can tell you chances are this is what you're going to do. So always have a plan, right? Risk management and have a plan. So whatever the market throws at you, you're always prepared. So you can see in this scenario in this week, right, whatever the market throw at me, right, the most I had was, a few small losses, right? These losses can be easily overcome. But if I'm going to risk big, these losses would have a very long permanent damage on my account. Okay? So I hope this week's market analysis, well, I didn't really talk much about trading opportunities except maybe for the Aussie dollar and the euro pound. And gold, maybe this is an area to watch for as well. But other than that, right, I think this week's is more of a talking about the psychology, talking about your risk management, and talking about having a plan. So with that said, right, I've come to the end of this week's video. I hope you find it useful. And I hope it gives you a good insight into the reality of trading, right? Not every month is going to be a winning month. Not every week is going to be a winning week. There are ups, there are downs. If you've been following me for the last few months, right, you have basically see how my trading is moving along with time, right? There are good times and there are, not so good times. So with that said, if you have any comments, any feedback, right, feel free to let me know in the comment section below. With that, I wish you good luck and good trading. I'm going to find my daughter right now. Talk to you soon.